How you doing, everyone? This is Darkpool Algo, and today is Wednesday, April 7th, 2021. Wanted to put up another video. Going to go over some things specifically with FlowTrade and the Darkpool Algo. Also going to look at some picks for tomorrow and maybe possibly review some from today. So if you guys find this content valuable or if you have any suggestions, please hit me up in the comment section below. And as always, it helps out the algorithm if you hit that like button and subscribe. And we'll get right to it. Thanks. All right. Thanks for bearing with me. I wanted to try out some new video recording software to see which one gives me the best tools as far as annotations and being able to mark some things up, as well as quality of recording. We're trying Zoom out here today. So I wanted to start off with the FlowTrade interface. There has been some questions about what certain things are and what certain things do. So I guess the first thing I wanted to do was point out this line here is the algo line. I use the dark pool algo on both the 1 minute and 15-minute chart. As you can see, find the 1 minute here, 15-minute here. Some other areas that we need to be paying attention to are the block trade levels. These are dark pool block trades, as you can see in blue. Another nice function that we can use from FlowTrade is the divergent scanner. And that can be seen here. The divergent scanner, you can set between 15 bars and 30 bars. The 15 bar is typically what I use. And this is available to all members, all paying members of FlowTrade. What's really nice is that this is running real time throughout the day. As you can see, in Morgan Stanley MS, we've got a little bit of a divergence happening. It looks like it began here, ended here, and that's going to play out over on the 15-minute chart. You can see we've got quite a bit of bullish divergence here in this area. Anytime we have the algo or large institutional buying deviated from price action, what will happen is price action, these two will need to reconvene at one point. So more than likely, price action will be pulled up with the algorithm. So a couple stocks I wanted to go through today off the list to try to get something prepared for tomorrow is MS. TSM is another one. We've got some great. We've got quite a bit. What do we do here? We've got quite a bit of bullish divergence on the 1 minute chart. Looks like it may have come down to try to fill that gap. As I mentioned before, if you guys aren't aware of this, anytime there's a block trade printed, price action will use that as either support or resistance. As you can see here, price came down, found some support, but eventually selling pressure or profit taking caused it to break through the support, and it's on its way back down to, I would assume, this 1911 level would be the next area of block trade support that we have. So let's get into it. A couple other things. I'm still trying to get some charts set up that I feel comfortable sharing with you all. I do use some proprietary and paid indicators in my TOS charts. Members of FlowTrade, full paying members of FlowTrade, have access to some proprietary tools that they provide also, as well as a trading system that is phenomenal. But It's not required. You can trade however you'd like. If you have an established system, if you like to use support and resistance or Keltner channels or Bollinger Bands, Ichimoku clouds, any system that's working for you, you can use the FlowTrade system with. The nice thing about FlowTrade in and of itself is the algorithm shows you what large institutional smart money is doing and the direction price will more than likely go based on that. So, all right, so let's go. Goodness, my screen just all marked up. All right, let me figure out how to clear all this out of here real quick. Look at that, pretty fancy. Okay, let's go with, most of you guys who follow me on Twitter will see a chart setup similar to this. So I may just start off there. Second here. Okay. We're gonna start off with MS. This chart system that you see here, real quick overview. These bands are ATR bands. So we've got one ATR, obviously green, one ATR, purple, two ATR, three red, three ATRs. I'm using some colored bars to indicate momentum and direction. Down here we have the Squeeze Pro that and the Ready and Fire, which are both proprietary from Simpler Trading. We do have a referral or a discount for that. If you're interested, hit me up in the comments. I'll get you over a link to that. Um, so yeah, Morgan Stanley on the daily, looking pretty good. We've got came down. We found support outside of the 1 ATR. Since then, we've been moving back up to the mean, which is this 20 EMA. Looks like we came up. We found support there. Printed a doji. Doji typically means indecision in price action. So today was a doji day. Such a word name. Down on the 78-minute chart, looks like we're just trading within this range here. So we're trading within a range. Some more of my chart layout, yellow and purple boxes that you see are modified Darvis boxes. If you're not familiar with what Darvis is, hit me up in the comments and I will do a session on what Darvis is. So looking generally at the chart, we've got a mid-fire signal on the 78. We've got a fire signal that started yesterday on the daily from the Ready and Fire system. That actually coincides pretty well with the divergence of price action and the algo. Let's see. One of the things I like to do right off the gate is go ahead and outline some Keltner channel support and resistance areas. I've got my charts color coded for that. I have the daily and weekly and monthly on this chart here. It looks as if though weekly and monthly are very close to one another. So I'm just going to create one price level for that. And that would be weekly, daily, mid. It's a color that I can see. We'll leave it there. I also use some stacked EMAs, which would be the 8, the 21, and the 34. Mid there, and kind of explain to you what happened here. So obviously price went up, made a new all-time high, came down, broke through our 34 EMA support at the end of last week gapped down to the daily killer channel bottom, which is a huge support zone, came up, and it's just been kind of trading in this zone. Today, we closed barely above the 34, as you can see here, which is good, which means that we're starting to recover from, it's not even really a fade, it's more of a cooling off, in my opinion. We've got a squeeze is firing slightly to the downside. This is an indicator that I created for moving at, it's a combined MACD indicator that shows whether the MACD is positive, neutral, or negatively aligned on multiple time frames. The time frames I have set, I believe, are the day, the 2-day, the week, and the month. So the 1-day MACD is positive. Coming down to a smaller time frame chart, this is the 15. You can see that, the 15 is positive. On my lower time frame charts, I have the same indicator, except for it's set to 20 minutes, 1 hour, 2 hours, and 4 hours. This setup here that you see, all right, so what you see here are MACDs stacked positively, which indicates that price is in a generalized upward direction. Here you can see the same thing. See if I can, sorry guys, I'm just getting used to all this. So you can see the price went from stacked negatively to positive. As it turns positive, we get some upward direction in price action. So let's clear this out of here. One of the other things I like to do when I'm trying to find generalized direction is throw some Keltner channel, or excuse me, throw some fib levels up. Hopefully everyone knows what Fibonacci is. If you don't, let me know. I can do a quick video on what Fibonacci is and how that works. So looking at the fib levels, I see that the 618 has confluence with the weekly Keltner channel top. The 786 has confluence with the daily Keltner channel mid. So these would indicate two very strong price points for me to target, as long as price action can get through the daily and the weekly Keltner channel mid. Let's see what that looks like on a smaller time frame. So on a smaller time frame, I've got the same type of Keltner channel set up. And just put some lines up here so that we can see what we're talking about. It's gonna be my 4-hour mid. That's a great support level. 4-hour top. At whole number is going to provide some resistance and give us a short-term target. All right. So today, what happened with MS? It's like opened up, gap down, or Looks like it opened and just faded all day. Found some support at this level here, which is my 4-hour mid. It's pretty nice how that almost comes down and touches that right off the bat. This is the actual 30-minute bottom. So the price came down, found some support, opened up the pops, went through the 4-hour top, ran into the 4-hour top as resistance, faded throughout the entire day, found some support, a 30-minute bottom, went up, touched to the 30-minute top, came back down, 30-minute mid, and towards the end of the day, was steady buying. Which seems to coincide with what the algo was doing for today. Came down, deviation, opening pop, immediate deviation. Algo was buying. Price action probably sold off by taking profit. We found support here, up and back. See if I can shrink this in a little bit. So MS for tomorrow, because we do have this divergence here. And on the intraday, we've got, we ended the day on a doji within 1 ATR of the mean. We have buy signal on the Iridium Fire. We have positive VWAP. Our EMAs are stacked on the 5-minute. These are some things that I look at here. Our multi-time frame squeeze histograms are positive, and we have medium compression squeeze on the 30, the 60, and the 2-hour. As far as targets are concerned, let's see. If we can get over the 4-hour top tomorrow, I'd target the weekly $80 level as a take profit 82, and then ultimately 86. So let's look at Morgan Stanley 86s, 85s, ton of open interest. However, the 80s have just as much open interest. And if you guys don't know the concept of pinning, this is something that market makers do to basically try to make all the money. I can get. So this $80 level, you'll see that there's 23,000 contracts on the call side, 12,000 contracts on the put side. So if the market maker was able to pin Morgan Stanley at $80 by Friday, by the 16th, that means they don't have to pay. They wouldn't have to pay 12,000 put contracts. They wouldn't have to pay, 23,000 call contracts. So it's something I always like to look at when I'm trying to choose an options strike price. So looking at open interest for this week's, the 86 was our target level. 83 looks pretty good. Got an expected move of $1.50, so I would probably look to go out to either the 80 next week or the 85s. The 80 puts us right at the weekly mid, which is also well within this, which is well within the 1 ATR expected move. So yeah, I like the 80s. This bullish diversion should play out. Yeah, I like those ones. I'm going to write that one down. Hold on for me for a second, and then we'll keep going. Okay, sorry. I had to take a quick break for a second. All right, the next one we're going to look at is TSM. Obviously, we've got some pretty significant divergence happening here. As I'd mentioned earlier, it looks as if though they've been taking profit for the last couple days. I would anticipate 119 being a pretty major support level. I'm going to try it something a little different this time. I'm going to chart TSM on my trading view chart to give me a little bit more comfort, I guess. All right, so first thing I like to do is set some levels. 120.15 is the 4-hour bottom. 119.90 is my 15-minute bottom. $126. Didn't realize how much room this puppy moved. All right, 123.40 is, let's call it 50. Daily top, where our top is 126. So we've got our 4-hour top. Daily top. Um, the daily top. Yeah. All right, what do we see here? We've got a mid compression squeeze forming the squeeze indicator. TSM in comparison to the rest of the market is choppy, is what this indicates. We've had, I'm sure there's a technical term for this, but some people call it a Busby, some people call it a bunch of other things, but essentially what happens is you get a bottom, then you get thrust up, retreat to a support level, and then the next move out. I don't know if that's an ABC level or you can call it whatever you want, but it's a pattern of price action that seems to be pretty consistent. So we came up on the daily, broke through our eight again, 8, 21, 34 units. So on the daily we came up, we retraced. I get nervous when I'm on the camera. I don't know why. All right, so let me retrace from all-time high back in February, or the most recent high, I think it was all-time, it's TSM. In February, we were fib on there, so retraced to the 50% retracement from this move here. And this move here puts us at 125. Okay. 125 here. All right. Go through the 50% retracement. We retrace back down to a support level. And that support would be this 21 EMA, which is also the 4-hour bottom. From there, our next move more than likely would be in an upward direction because our dark pool algorithm is, again, buying right? Looking at our most recent block trade levels, we have a block trade come in yesterday at 122, which price action found has support, broke through as resistance. So 119 is the next key level we're looking at. Okay. 119 area is this 4-hour bottom, 15-minute bottom. So we found some pretty decent support, right? 119, 120 area. There's also 0.618 retracement. Okay. Let me find some targets here. Since we know that price action is going to be bought because the algo tells us so. Where are we going to go? Some people do their fib extensions like this. I prefer to do mine a little different. I prefer to do this. So again, symmetry. In the short term, we're at 120. We have found support in this 4-hour bottom, 15-minute bottom area. Price likes to ping pong back and forth in between the Keltner channels. Goes up from the bottom, from the bottom to the mid, makes a decision to go either from the mid to the top or from the mid to the bottom, and vice versa. Just pretty standard price action. So us being at the 4-hour bottom gives us more upside potential since we have so much support here. The algo has indicated that they want to buy. As you can here, should have drawn this here. Right. Algo is indicating that it wants to buy. Okay. We have support here. We have support here. 21 EMA support, anchored VWAP support, a bunch of other support right here at this 120 level. So anticipating a move upward. Let's draw this. Squeeze is about to fire, typically with the momentum going upwards from the downward move, reverse. Just need to figure out where we want it to go. And really, I don't see why this wouldn't go back to 128. It's got a $3 ATR move. Give it a couple days. It could potentially see 128 by then. Let's do this. Cool. Guys, thanks for bearing with me on this. I'm getting used to being able to explain things to others. Typically, I can interact with people to kind of see what they would have interest in. Most of this is just so routine in my head from doing it for so long, all the time. I just have to try to slow down to explain the process. So again, I appreciate you guys being here. I appreciate you bearing with me through this learning curve. I will respond to as many comments as I can. Just put them in the comment section below. This is a pretty cool tool if you've never used it before. This is, excuse me, this is channel VWAP. When I'm trying to find a place in time that has a high probability of price action going where I want it to go, this is one of the tools I use. And that's the trend-based fib extension. I need to drop in line, find expiration. I'll drop in a vertical line. Okay. So putting together everything we know about TSM. One, semiconductor. Semiconductors are hot right now. Why? Because there's a national shortage. They're going to get some skinny money, and the market loves that kind of information. We had a pretty good move, right? We came up off of this nice high we were at, which would be 130 something ish. Came down. We found some support. Last week we started to move back, upward. I just noticed that. So should be the feel like this is the one, two. We'll get into LA wave later. We came up, we retraced past the 618, past the 50%, pulled back, found support. We found support here at the 120, 119, 120 level. Algo like that level and decided I want to start buying TSM again. We throw some fibs up. We look at our counter channel levels. Our top as a magnet, 126 could easily be reached before the 9th, but based on Fibonacci, I like the 129, 130 level, which I believe is sorry, I was looking at another chart there to see if it had any significance. 134. So with this setup here, I look for major Fibonacci intersections. So we have a 618, 127 at 134. Probably by Monday. If we're looking at a $4 move, Friday, what's this? That's 128, which is also a 50%. Definitely think we could see 128 by Friday. I'm looking for this one out here, which should probably be the 142, which is a 1618 extension by next Friday, or possibly even the 130. I like this 1.414 extension. A lot of people don't use it. Amazing how often things line up with that. So 134, 142 TSM, April 16th. Let's see what we got. TSM, April 16th, 134. Look at that open interest, 26,000. 130s are super cheap. 125s. What did I say? 34. 135 is doable. These 125s, I actually like a little better. The market maker's anticipating a $7 move. 125s, almost a 30 delta. The open interest is in that pinning mentality or pinning philosophy, thought process. Monthly expirations, market makers will try to save as much money as they can on having to pay out the least amount of options contracts as possible. The 16th is the monthly expiration. We've got $7 market making move. We've got almost 20,000 contracts that they wouldn't have to pay out at the 125. I mean, really, it's a buck 45. Definitely have the liquidity there. 4,000 open interest. There's that move again. So let's try, well, all right. So we have a retracement to more than 2 ATR where we found support last week, right? We made a bullish move up to more than 2 ATR at 127, and then we've reverted to the mean. So up, back, revert to the mean, 119 area, right? We've just started. We are in mid-level squeeze on the daily, positive ADX. The SPX beta is almost 2 times what it would be if we were to just trade the S&P by itself. Not super thrilled about this VWAP. Our EMAs are stacked, right? We are in that 1 ATR move. And we've got a price target with a lot of open interest on monthly expirations. So yeah, I like the TSMs. Obviously, you guys choose what you want. You got to manage the risk. I'm not a financial advisor. All of this stuff is just my opinion. So I think that's going to be it for today. Just the review of the two. I'm still trying to get used to this YouTube thing. If you like what you see, subscribe, hit the thumbs up, leave some comments for me. Let me know what I can do to assist. If there's any improvements that you guys would like me to make, I'm totally open to the criticism, constructive criticism, and yeah, your opinions. So thanks for joining me.